Hello and welcome to the Weekend Investing Daily Bite of 28th of May. And first, a look at the disclaimer, the important one that the returns displayed on this platform are provided for information purposes and securities are for illustration. Let's go to the story of the day. The story of the day is that India VIX is rising. And if you are aware of what VIX relationship to markets are, then up till about 20 VIX, there is no issue, no volatility is expected. 20 to 25 traditionally has been a bit of a concern that volatility is coming through maybe sometime soon. And beyond 30 is like, it is an extremely dangerous market. Uh, be very, very careful. So we are currently around 24, not in the danger zone as of yet, but every election cycle, just before the election, you will find that VIX is rising, and VIX is nothing but a measure of what is the volatility expected. Options prices are going through the roof, so both calls and puts are going through the roof. Those who will buy options at such high VIX, unless the directionally the place where the market goes is in their direction, they're going to lose a lot of money. That's usually the case that happens here. But yes, the elections are a once in a 5 year event, and on this event a lot of bets are in place, not just locally in India but globally. People are betting on this outcome some way or the other, and hence there is sensitivity of this particular event. Where is Nifty headed? Nifty, if we look at the hourly chart here, I've superimposed a super trend just for trend following basis. Has towards the end of the day, you know, gone into the sell mode on the last candle. It may just be uh, uh, a false breakdown here, but we will know tomorrow. But the sense the market has been giving for the last couple of sessions, ever since it broke this 22,800, is that it is not really willing to pull up very hard, and it is kind of consolidating near that breakout. Hopefully the market will come down and retest the breakout at about 2200 and then go back up again. That is the sort of the best case scenario that I can see right now. In terms of the benchmark indices, different indices, so Nifty Next 50 also going into a short-term sell mode, although on the long term, we are doing extremely well, no issues at all. You can see here that the RSI has been falling since the 21st, and the price was still rising, so there was a divergence right here. In terms of the mid caps, again you can see mid caps also fell through at least this indicator. Not necessarily that the long term trend has changed, but a short term focus has moved towards consolidation. Small caps have not been able to take out this 15,900 odd top, and they too have broken down today. The indication here has been on since 21st that the uh, the RSI also has been moving down. So again, a consolidatory phase. I would not call it as any sort of a corrective phase that has started, but on a very short term trend on an hourly basis, you are seeing the market come off. Nifty Bank Index, this is still quite robust. It has come down to yesterday's low, but still in the buy zone right here. Of course, we had a great pull up from 47,500 index levels, which is still holding up quite well. FIIs and DIIs, what are they doing? So this is the cash market activity on a daily basis. You can see here that as of yesterday, FIIs had sold 541 crores, DIIs more than making up for that sale by buying 923. And the last few sessions also, you can see that nowhere the kind of mid-May sales is happening anymore from FIIs. FIIs are in this light blue color candle. So after 21st May, we've hardly seen any FII sales. Rather, a one-day huge buy was seen on 23rd May. of which some profit taking may be happening, but DIIs have been consistently buying all through this period. In terms of the heat maps, the Nifty heat map, you can see Reliance losing some ground along with other energy stocks, ITC losing ground, Maruti, Tata Motors, Bharti, NTPC Power Grid, almost all stocks that have been running uh, quite well on the Nifty taking a backseat today. Pharma and steel were the only sort of saving grace sectors, along with some in two-wheelers. Also, life insurance companies were running today. In terms of the Nifty Next 50, it was more red. So the pressure on Nifty was not as much, but the pressure on Nifty Next 50, CNX small cap 250, mid and small cap 400 was much larger. You can see here Adani stocks losing ground, DLF losing ground, even the public sector enterprise stocks that have been running HAL, BEL, all those stocks, IRCTC also losing ground. So there was not much of green here, although McDowell's, Berger Paints, Shree Cement, ICICI Prudential were some of the gainers in the Nifty Next 50 uh, index. Sectoral data, almost all sectors in the red today. Real estate leading the downtrend by 2.2% today, although it has been gaining over the last 1 month, 3 months, and 12 months in a big way. This last 1 week has been a very mixed kind of a week, with metals losing ground along with energy and commodities net. And today's 0.5% pharma was just something that completed the negativity of pharma in this week, but really not going anywhere. So far in this 1 week, autos, bank nifty, private banking are the ones which have gained some ground in the last 1 month. Autos and metals have done really well, along with public sector enterprise stocks, all of which were actually in the red as of today. In terms of the sectors, you can see Nifty real estate has been going up dramatically since November. The 200 DMA is far behind the price action point. Uh, we have a trend line support which is about 4 to 5% below where we are right now. That may be the support that the market may look at, but there seems to be some cooling off of this trend right here. In terms of the Nifty public sector enterprise stocks, this also has been running quite rapidly since November, almost doubling since November, which is, I mean, these stocks have remained stagnant for so long, and for them to double within the last 6 months is quite remarkable. Again, whenever prices or any index moves very far away from the 200-day moving average, there is always scope for price corrections and reversion to the mean, so as to say. You can see here even the RSI index peaked out in December and has been kind of falling in a falling trend since then. So the strength of the move as we are going month to month is reducing, although the trend is still up. So that's how you can read this particular chart. Other stories for the day, I've picked Hero Moto as one of the outstanding uh, story for the day. So Hero Moto, which had broken out in beginning of May, continues to do so. Even on a weekday, a stock which is making a new all-time high is actually telling you a signal that it is inherently very strong, and that all falls in this stock, at least for some time, should be buying opportunities. The bottom here near 4950 is sort of the stops that a short-term investor can look at. Similarly, TVS Motors, again in the same two-wheeler category, has been doing well. You can see there was an inverted head and shoulders kind of a pattern that was made here, broken out just 2 days back, and is also going to possibly challenge the previous high very soon. These two stocks are showing that the current day's fall did not really impact them at all. Hence, there's a relative strength that is available in these two stocks to look at. So this is all I have for today's Daily Bite. Thank you for watching. Please do like and share this channel or subscribe to the channel if you haven't already. And I'll see you in the next one. Bye.